Welcome to Mastering CPO and Automotive Retail, the JMJ Insights Playbook. In the next 6 minutes, I'm going to walk you through the most important framework for running a high-performance CPO program at any franchise dealership. CPO is one of the most underestimated profit centers in the store. Most dealers treat it as a used car with a badge, but those who dominate the segment treat it as something completely different. By the end of this video, you'll understand exactly what that difference looks like. Let's get into it. Here's the most important reframe in the entire playbook. CPO is not a used car program. It's a brand extension program that happens to sell used cars. Those who internalize that distinction are the ones you see with the full CPO lanes year after year. Done right, it generates profit at 3 levels simultaneously. Layer 1, front gross premium. CPO units sell for $500 to $2,000 more than the equivalent non-certified units. Customers are paying for peace of mind. Layer 2 is F&I. The factory warranty creates a natural conversation for supplemental VSC products, prepaid maintenance, and GAP without fear-based pitch that turns people off. Layer 3, and this is where most miss, it's a fixed ops pipeline. CPO inspections generate RO revenue. Warranty repairs bring customers back to the drive, and certified buyers service 2 to 3 times better than non-CPO buyers. If you're only measuring front-end gross, you're measuring this thing. OEM CPO program is a sales tool, but only if your team knows it cold. Most major brands offer a similar structure, comprehensive expansion, bumper-to-bumper warranty for the first year, and a long-term powertrain warranty. The key distinction you need to drill into every salesperson is the difference between factory-backed and dealer-certified. Factory-backed means Toyota, Honda, or BMW will stand behind that vehicle. Dealer-certified means that your store wrote a piece of paper. One converts better, one commands a higher retail premium, one protects you from compliance exposure. For compliance, it's not optional. OEMs will audit CPO programs. Don't certify ineligible vehicles. Don't use uncertified technicians, and do not falsify any inspection reports. This will create not just risk, but warranty chargebacks as well as program suspensions. Build a clean process from day one. The example on the screen is the kind of language that actually works in the showroom. Specificity sells. 7-year, 100,000 mile powertrain warranty from Toyota converts better than it's just certified. Sourcing is where elite CPO managers separate themselves. Not in the showroom, but in the pipeline. We build before the car ever hits the lot. There are 5 primary channels, and the best operators run all 5 intentionally. Off-lease returns are the gold standard. You know the mileage, you know the history, you have a chance to grab the unit before it goes to auction. The service drive, most overlooked pipeline in stores. Customers sitting in your waiting room who own CPO eligible vehicles with equity are warm prospects. Train the advisors to recognize that and loop used car management. Every new car traded should be CPO evaluated before appraisal. If you're wholesaling CPO eligible same brand units, you're leaving retail gross on the table. At auction, stick to OEM sponsored lanes where inventory is more predictable. Never buy a CPO unit without a clean condition report and a VIN history. Conquest sourcing. Buying eligible units from other franchise dealers' auction trades is an underused channel for stores in competitive markets. The rule: build intentional pipelines for each channel. Don't rely on just what shows up. Reconditioning is a cost center everyone tries to minimize. The best operators treat it as a profit lever. Here's the math. CPO units in your market command a $1,700 retail premium over non-equivalent ones, and your average recon is $850 plus the OEM certification fee of around $600. You're netting roughly $250 in additional gross, plus the fixed ops RO revenue you capture during the inspection itself, which typically runs $300 to $500. That's before you factor in F&I uplift and the service retention value of a CPO buyer. The decision framework on your screen is simple. If recon is under $1,200, market demand is solid, certified. Between $1,200 and $2,500, you need to run the numbers on that specific unit. Over $2,500, you're probably looking at retail without CPO or perhaps wholesale. And if there's any structural damage, don't certify. Speed matters too. Every day a unit sits in recon is a day it isn't generating gross. Target 3 to 5 business days from acquisition to front line. If you're exceeding 7 days, you don't have a recon problem. You have a fixed ops alignment problem. CPO pricing is where dealers either capture the premium or give it away. Most stores underprice CPO units out of fear of aged inventory, not because the market demanded it. The framework is straightforward. Pull non-CPO comps for your DMA. Establish what the car would sell for uncertified, then layer in your CPO premium, typically 800 to 2000 depending on brand and depending on set. And validate against CPO listings for the same brand in your market. And critically build in structured price reduction triggers. Day 30, drop 300. Day 45, have a wholesale conversation if it's not moving. Letting CPO units age without price action is one of the fastest ways you compress that margin. Here's the digital piece, your VDP, Vehicle Detail Page. It needs to communicate the specific coverage in the listing title, not just certified. Toyota certified, 7-year, 100,000 mile powertrain warranty. That specificity is what justifies the price premium in the customer's mind before they ever set foot on the lot. If the listing looks like every other used car listing, it will perform in that manner as well. CPO sale is not a used car sale with a certification stick. It requires a distinct presentation that builds the value story before the price conversation. The framework has 5 steps. Step 1, certification hook. Before you ever walk to the vehicle, establish what certified actually means in a concrete, specific terms. Most customers have been told the car is certified at a dealership before and received little more than a piece of paper. Reset that expectation immediately. Step 2, walk that lot. Make sure every major system is known. Engine, electronics, brakes, connected back to the inspection and the warranty. Everything under here was inspected and signed off on. Step 3 is the history reveal. Show the Carfax proactively. Never wait for the customer to ask. Transparency builds trust. It disarms the used car skepticism that can slow down every deal. Step 4 is a test drive. Remind them this drove through a full road test as part of the certification. Driving the car Toyota said was ready. Step 5 is protecting the premium at the desk. Train salespeople to anchor the certification value before they move on price. A 7-year warranty alone costs $1,500 in the aftermarket. That's built into this price. CPO deals are the most F&I friendly in the store. If your F&I team knows how to work them, factory warranty creates a presentation architecture that non-CPO deals simply don't have. A certified buyer is already more trusted, less defensive. They've already bought into the quality story. Your job in F&I is to build on that trust, not reset it. The 4 core products for CPO are VSC, GAP, prepaid maintenance, and either key or tire or wheel. VSC positioning is critical. CPO deal. Never frame the service contract as protection against something going wrong. Frame it as continuity. The factory is covering you now. This extends that protection after it expires. Fear-based VSC presentations on a CPO buyer fear incongruent and lower the penetration. The benchmark target, 1,400 or more in PVR, 55 to 65% VSC pen, 45 to 55 on prepaid maintenance, 35 to 45% on GAP. CPO F&I PVR consistently outperforms standard used car F&I at top performing stores because the buyer comes in with a different posture. You cannot manage what you don't measure. CPO programs that run on gut feel consistently underperform programs managed against a clean and clear KPI dashboard. Here are the 7 metrics that matter. CPO as a percentage of total used volume should be between 40 and 60%. Below 30%, you have a sourcing or certification problem. CPO front gross should run 1,200 to 1,800. Below 800 means you're not capturing the certification premium, either in pricing or presentation. F&I PVR on a CPO deal should be 1,400 or above. Days to frontline, 3 to 5 business days. Inventory term, under 35 days. Certification rate on eligible units should be 70% or better. Watch your warranty return rate. Above 15% is a signal that your inspection process or certify versus wholesale decision making needs to be tightened up. The review cadence matters as much as the metrics themselves. Check the recon pipeline daily. Review CPO units sold and certification rate weekly. Run the full CPO P&L monthly. Front gross, F&I contribution, and fixed ops RO revenue from certification. Quarterly, do your OEM compliance audit. Dealers who dominate the CPO space don't have a CPO program. They have a CPO culture. The difference is operational and philosophical. The CPO program is what you do. The CPO culture is how you think. It means a used car manager sees every eligible trade as a potential CPO unit first. It means a service advisor knows that a fast certification term keeps variable ops moving. It means the F&I producer knows the certified buyer is the most receptive buyer in the store. It means that GM measures CPO as a true three-layer P&L, front, back, and fixed ops. Here are the 5 commitments of a CPO first store. Every eligible vehicle gets evaluated every time. Recon throughput is a department KPI, not an afterthought. The value story is delivered on every lot walk, not assumed. F&I is trained on CPO specific position. Fixed ops and variable ops are aligned on pipeline data every week. The CPO segment is growing. Customers want the security of a new car at a used car price point. Those who build the infrastructure, the process, and the culture can deliver that on the used car market for the next decade. If you want the complete framework, all 10 chapters, the KPI dashboard, the objection scripts, and the certification checklist, the full Mastering CPO playbook is now available at jmjinsights.gumroad.com. Link is in the description. Thanks for watching.